Good evening, ladies and gentlemen. On behalf of Team Bank of India, I welcome a very warm welcome to all the esteemed members of the press who have joined us today in the auditorium, and as well as those who have joined us virtually. A sincere apology from our end for all those who have joined virtually for having kept them waiting for the last 15-20 minutes because our friends here from the press could not join in time because of heavy rains in Mumbai. I hope that all our virtual friends would pardon us for this delay. Our top management on the dais today, we have with us here our Managing Director and CEO, Shri Rajneesh Karnatak ji, who's flanked by all our executive directors, Shri M. Karthikeyan, Shri Subrat Kumar, Shri Rajiv Mishra ji, our executive director, Mr. Rajgopal sir, is about to join us. As regards the program for the day, it will commence with our Managing Director and CEO sir's address, followed by question and answer session later on. May I kindly request our MD and CEO sir for addressing the gathering. Thank you.
Thank you, Madam. Good afternoon to all members of the press and electronic media, ladies and gentlemen, physically present over here and also joined from the virtual mode. It is my pleasure to welcome you all for today's interaction and share with you the financial results of the bank for Q1 for FY25. Indian economy has shown remarkable resilience in FY24 and achieved 8.2% GDP growth amidst geopolitical uncertainties. India has emerged as one of the only two major economies whose GDP at constant prices at 20% above and pre-pandemic level. IMF has also revised the growth outlook projections of India for FY24-25 at 7%, very close to RBI's estimate of 7.2%. The economy is enjoying twin balance sheet advantages with sound and stable banking sector and strong corporate sector. In light of the prevailing optimism, the bank is focusing on inclusive and consistent growth to become catalyst in Government of India's vision of Viksit Bharat by 2047 and will formulate strategies for key drivers such as financing MSMEs, agriculture expanding, and net of education loan and PMAY as outlined in the Union Budget for 2024-25. The focus area will be strengthening liability franchise through augmentation of low-cost deposits and retail term deposits to fund credit growth. Maintenance of asset quality will be priority by improving collection efficiencies and NPA recovery along with slippage containment. Our endeavor will be for enhancing customer experience by adopting more STP of our various products with safety, security, and compliance. In this direction, we have taken a few initiatives which are as under. On the business side, number one is the introduction of the innovative product called MSME BOI Star MSME Thala, which is into tourism, hospitality, and lease discounting advances to finance MSME units for meeting their financial needs for infrastructure development, acquisition, construction work in hotel industry, tourism, and logistics sector. Co-lending tie-up with quite a few NBFCs. Number three, Bank of India along with 6 other banks have come together and invested in CCIL IFSC Limited for providing foreign currency settlement system, which is FCSS in the GIFT City, Gujarat. New STRO product called the Bank of India Commercial Vehicle Loan has also been launched. On the IT and other initiatives, 25 products made live on the e-platform under the RAM segment and 15 more products are under development which will be launched during the current financial year. In line with the PM Surya Ghar Yojana, Muft Bijli Yojana, we have made solar rooftop product live on our e-platform. Under the MSME Mudra loans, STP for seamless renewal cum enhancement up to rupees 10 lakh has also been made live. With this, customer can renew, enhance, and take loans through the website from anywhere and anytime digitally. Portable UPI QR soundbox introduced to provide real-time audio confirmation for successful UPI payments. Bank has also enabled its ATM acquiring switch for NFS UDIR, which is Unified Dispute and Issue Resolution, to reduce TAT for handling customer disputes. E-facility is being made live through debit cards through all the three regional rural banks. CRM Next complaint management module and service management module is live for all the branches. UPI functionality has been integrated in the mobile app for instant payments, scan and pay, group payment, collect request from peers for convenience and accessibility, secure transactions, and reducing the cash dependency. We have published and shared the financial results of the bank for Q1 FY25 on the afternoon. The main highlights of the same are as under. On the business side, the global business has increased by 12.34% YOY from 12.14 lakh crores in June 23 to 13.64 lakh crores in June 24, with an incremental growth of 1.49 lakh crores. Global advances have increased by 15.82% YOY from 5.18 lakh crores in June 23 to 6 lakh crores in June 24, with incremental growth of nearly 82,000 crores. Global deposits have grown by 67,000 crores, which is by 9.74% YOY basis from 6.96 lakh crores in June 23 to 7.64 lakh crores in June 24. CASA has increased by 5.51% on a YOY basis from 2.60 lakh crores in June 23 to 2.74 lakh crores in June 24, with an incremental growth of around 14,000 crores. Domestic advances have increased by 17.29% YOY basis from 4.33 lakh crores in June 23 to 5.08 lakh crores in June 24, with an incremental growth of 74,000 crores. RAM advances have grown by 18.78% YOY to 2.84 lakh crores in Q1 of June 25. Retail advances have increased by 20.46%, agriculture has grown by 22.18%, and MSME has grown by 13.06% on a YOY basis. As regards profitability and asset quality, our net profit in Q1 stands at 1,703 crores, witnessing a YOY increase of 9.80%. Global NIM has improved by 4 basis points to 3.07% in Q1 FY25 as against 3.03% in Q1 of FY24, and domestic NIM has improved by 6 basis points to 3.43% in FY25 as against 3.37 in FY24. ROA stood at 0.70% in the Q1 FY25. Net interest income has increased by 6% on a YOY basis and stood at 6,275 crores as against 5,915 crores in Q1 of FY24. There has been improvement in the asset quality with reduction in both gross NPA and net NPA ratios. Gross NPA is now at 4.62%, improved by 205 basis points YOY from Q1 of FY25. Net NPA ratio is at 0.99%, improved by 66 basis points for this quarter, and for the first time, we have brought our net NPA below the 1% level. As per our guidance and in line with the growth of the economy, the domestic credit growth will be around 13 to 14% and domestic deposit growth will be around 11 to 12%, which is projected for FY25. We will concentrate on acquisition of new customers consistently to improve our CASA and retail term deposits for funding sustainable growth in credit. Going forward, the emphasis will be on strengthening the bottom line by improving the asset quality through better underwriting standards with increased digitization initiatives and minimizing the fresh slippages, and recovery in NPA shall continue to be the thrust area in the financial year 25. I would like to thank you all for showing faith in us and also sparing your time to come here and your continued support. The floor is now open for discussions and question and answer. Thank you so much.
Thank you very much, sir. Before we finally go ahead with this question answer session, I'd like to tell our friends here that the mics are already on your table at a time, maximum 2 questions, so that maximum people can interact with our management. So in between, I'll also be taking questions who are virtually coming in. So I'll be taking that as well. So yes, we are ready. And you introduce yourself first, your organization, and then you can put the question. Yeah.
How do you see the impact of the current budget and capital gains tax for the growth?
Yeah. So on the capital gain side, some announcement has been made in the budget for 24-25 definitely. And see, if you see on the banking impact, which it will have on the banking side, lot of issues are there with the raising of resources in the bank presently, especially with the deposit growth side. So what we are seeing traditionally is that lot of funds are flowing into the equity market. They are flowing not only to the equity market, but also to mutual fund and insurance company and other sectors of investment. So with this, in this capital gains which has come, there may be a possibility that some of the investment, especially which is going into the FNO, may come down, which is where there was a froth, which was building up as per the SEBI the guidelines also. So there we see that something a downward trend may happen on the capital market on the FNO side. And if a little bit of investment comes lesser to the capital market, definitely there will be more resources available to the bank for deploying in credit.
Thank you.
Hi, Jinit here from Money Control. So I've got two questions. First is I just want to get some understanding on your personal loan business. So you have seen sequential as well as year-on-year good growth there. So wanted to get some understanding on the outlook as such, because we are seeing some concerns on the regulator as well in this particular business. So what is BOI's take going ahead for personal loans?
Okay. So if you see our personal loan book, our book is not a very large book. It is at around only 10,000 crore of rupees. And this is as on June 24. In June 23, that book was at around 7,000 crore. So it's a YOY increase of around 40%. In the amount wise, it is at around 3,000 crore increase. However, let me clarify that on the personal loan book side, our book is secured in the sense that it is all secured by the cash flows from the borrowers. That is number one. Quite a few guardrails we have put on the personal loan book side, wherein one of them is that the CIC score should not be less than 700. The second thing is that they are salaried class. Majority of our personal loan borrowers are salaried class. Number three, we have another put a guardrail with the fact that the salary should be coming in the Bank of India saving account. That is another guardrail we have put. And some of our book within the personal loan book is also to our product of the housing loan, wherein to the housing loan borrowers we are giving personal loan. So there the mortgage is already with us on a long-term mortgage of 10-year, 15-year or a 20-year. There we are giving a top-up as a personal loan. So our personal loan book is quite secured. And if you see the delinquency on the personal loan book side, it is around 60 to 70 crore only as on date, as on 30th June on the delinquency side, as against a book of around 10,000 crores. This also includes the credit card outstanding, which is only at around 500 crores, 550 odd crores, within which whatever the NPA is, 100% it is provided. And SMA numbers is also well in control. So there is no concern as far as Bank of India is concerned on the personal loan book side.
My second question is on your deposit growth. So you have given an outlook of growing it by 11-12%, but what we have seen in the last few quarters is what you're getting is a single digit growth, 9.5 as such. So I wanted to get some understanding that are you going to look at raising rates anytime soon? And what's going to be the focus? Because I've seen you've got good CASA growth compared to your peers as such in private and the public space. But we wanted to get some understanding on, are you looking at raising rates or which deposits are going to be your focus going ahead?
Yeah. So if you see the Bank of India franchise, and if you see our presentation also, the biggest strength for Bank of India is our franchise and the kind of domestic pattern of deposit that we are having. So if you see the slide also, our CASA number is at around 43%, and we have maintained that range at around 42 to 43%, and that is one of the best CASA numbers among the peer banks. Another thing which is there on the slide is that we have depicted also that our bulk deposit is only around 13 to 14% of our total domestic total domestic deposit. So which means that 86% of our domestic deposit is either CASA or retail term deposit. So retail term deposit in the sense that as per the new RBI definition of up to 3 crores. So that is the strength for us. That helps us in reducing the cost of deposit. As regards our present deposit franchise and the term deposit is concerned, we already have a product which is for 666 days for the retail depositor, where we are offering a rate of interest of 7.3%, and there we are garnering good rate. And let me clarify here that if we see this 7.3% of rate on 666 days deposit, it is much cheaper than the rate at which we are able to garner the bulk deposits. These 50 crore and 100 crore deposits for 1 year, where the rates are much higher. So this is a cheap the rate at which we are able to garner such deposits. Another important thing over here is that as regards competing pace with the credit growth is concerned, if you see our numbers further, our domestic credit growth has grown by around 17% on a YOY basis, and domestic deposit has grown around 10 to 11%. This 9 point something percentage growth on deposit is a global deposit growth. Domestic deposit growth has been around 10%, 10 to 11%. So this gap of 5 to 6%, we have formulated a strategy wherein we have raised CDs from the market, number one. Number two, we have also done some borrowings on the excess SLR, which is available to us, which is still is cheaper than raising bulk deposits. And number three strategy has been raising some borrowings from SIDBI or NABARD, which is again coming at a cheaper rate. So if you see the gap at which the credit has grown, a YOY basis, and the rate at which the deposit has grown, there is a gap of around 15,000 crores from the slide if you see. So that 15,000 crore we have garnered through this strategy, which is raising from the excess SLR, from borrowing from SIDBI, NABARD, or from the CD. Going forward, what we have done in this month also, in the month of July also, we have raised 5,000 crore on the infra bonds. So that is another strategy which we have adopted. We have taken a board approval of 10,000 crore in this financial year of raising infra bonds, out of which 5,000 we have already raised. Another 5,000 we will be trying to raise in the month of September again. That will again help facing the growth of deposit. So these are the strategies. Apart from that, what we have done recently in the month of July, our resources department has done is that we have 13 FGM offices and 69 zonal offices. So 82 offices we have now posted exclusive resource officers whose only job is to garner deposits and do tie-ups. Tie-ups with whom? Tie-ups with corporates, number one, tie-ups with schools, tie-ups with education institutes, tie-ups with hospitals, tie-up with central and state government, and also tie-ups with central and state PSUs. So through that, we will be garnering a lot of CASA deposits, saving and current accounts, and also finally the RAM advances, like typically the retail advances like housing loan, education loan, personal loans. So that kind of strategy we have adopted, and we are very sure that in the coming 2-3 quarters, good resources will be able to raise, and we will be able to garner whatever resources are required for the kind of credit growth that we are seeing in the bank.
Thank you so much. I'll come back later.
Thank you.
Hi, sir. This is Shubhrata from Business Standard. My question is on when the budget, Finance Minister announced that state-owned banks should devise a mechanism in-house for credit worthiness of MSMEs. So where are we on that? And also, are you comfortable in lending to MSMEs in this when they are in the special mention category?
Yeah. So as far as lending to MSME is concerned, we have quite a good guardrails which we have already put in the MSME lending. So we have SME CC centers, more than 100 SME CC centers in the country. So the entire credit underwriting in the MSME space is happening through these MSME CC centers. So basically the model is that the branches source the proposal, do the marketing part, and they send it to the SMECC center, who do the entire credit underwriting, due diligence, everything. And then when they sanction the proposal, it goes to the branch, and from where the disbursal and other things take place. So what we have seen over the last 2-3 years since these SMECC centers have been formed, our credit underwriting has improved, and also the delinquency has come down. So that is a clear thing which is there available with the data. So a lot of guardrails have already placed in various categories of MSME borrowers, and schemes also have been floated for MSME, like for the ODOP, like one district, one product. Under that also MSME lending we are doing. So we are very comfortable with the present MSME portfolio which is there, and the growth is also 13% on a YOY basis. And if you see the SMA numbers on our slide above 5 crore MSME, there also our credit quality is quite good. So we see no challenge as far as lending to the MSME is concerned, and we are quite robust and are having a good target for the MSME lending. As regards the SMA lending concern is there, so we are guided by the RBI policies on the SMA lending to any borrower, not only MSME, I would say. So because we are a regulated entity, we will be going as per the RBI guidelines on lending as far as to that category is concerned. Thank you.
Thank you very much, sir. We have one Mr. Amol Dete, who has virtually joined us from Economic Times. Kindly unmute yourself, Mr. Amol, and you are free to ask your question. Can we have Amol, please?
Hi, good evening. This is Amol here. Am I audible?
Yes, Amol.
Yeah, thank you. Thank you for the opportunity. Just wanted to check with you, sir. I think you gave a detailed response to the deposit question, but the reason you're allocating perhaps all your resources to garner the deposits from SLR from different institutions and putting a lot of efforts in terms of hospitals and schools to raise the deposits. Any particular reason? Is that, I mean, why? Because most of the bankers are slightly also worried that the deposits are shifting to mutual funds and other investments. Is that also one of the reasons that the bankers like you are also going very harsh in terms of raising more deposits from the customer sides?
Yeah, thank you, Amol. So as you know that the credit growth is outpacing the deposit growth. That is quite visible from the RBI data also. And if you see our bank's balance sheet also, it is the same situation. So we have grown our YOY credit at 17% and deposit has grown in the domestic side at around 10 to 11% and the gap is around 6%. So we have to re-strategize ourselves to raise more resources. So so far as that thing is concerned, so we have put on a strategy that we will have more tie-ups with lot of more corporates, education institutes, hospitals and others, and central and state government PSUs and all those kinds of things, so that we are able to get good kind of tractions on the resources and CASA side is concerned. So that is the reason we have adopted that strategy, and with that reason only we have now deputed 82 specialized officer who will be doing that kind of work only on raising of the deposit, because deposit is definitely a challenge at present and we need to increase our deposit growth rate so as to keep pace with the kind of credit growth which is coming in the system.
Yeah, I will add to what MD sir has said. If you look at the data, this actually the whole strategy that MD and CEO has outlined is in the context of the data that is reflected in the deposit side, especially household savings side. If you look at the household savings, it is around 39% of the total savings. Now, what has happened is, there is something silver lining that has happened. The new tax regime has actually taken out whatever incentives, tax incentives that are there for small savings and other types of savings that are available. So naturally, we feel that the residual savings that are there that is not going to the mutual funds is going to actually revert to banks where rates are more attractive than anything else. So we will be getting good traction once we have that kind of strategy. That is one way we augment liabilities, considering that there is an environment to augment savings now.
Thank you, sir. Can we have some questions from ladies? They are in good numbers. Okay, you can take the mic, ma'am. It's kept there. Mic is off. Can somebody help?
Yeah. On green bonds and the ESG, right? So green deposit policy we have already formulated. So we will be very shortly launching the same once it is finally approved by the board. So that will be coming in this quarter or the ensuing quarter. That will be coming as regards the green deposit is concerned. And on the ESG framework, we have a very detailed ESG framework which we have outlined in our presentation also. We are doing very good work as far as the environmental, social and governance side is concerned. So a lot of sustainability things we are doing on the social side also, where the impact is happening to the people in general in the society when we are giving retail loans. Number one, whether it's a personal loan or a housing loan, lot of life-changing experiences are happening on the social side. Similarly, when we are giving agriculture loans, again, there are a lot of life-changing journeys and things which are happening and which have been, we are catching them also through bites and putting on our website channel. Similarly, on the MSME side, when we are lending to the MSMEs, like even to the Mudra loans, lot of self-employment we are creating over there. So there also a lot of life-changing journeys are happening through the lending which is happening from us. So all these things, apart from that, the PMJJBY and PMSBY, that accounts that we are opening on the insurance side, in the saving side, there have been many cases throughout in the bank where unfortunately the person has expired, depositor has expired, and the the family has got the insurance claim, whichever as per the government scheme, there also life-changing experience for the family has happened. So all these ESG initiatives bank is taking on a very proactively, and we are very much serious and concerned about that. And we have also elucidated that in our presentation slide, which is there in the presentation. Thank you.
Can somebody pass the mic to ma'am, please? Kindly switch it on, ma'am.
I'm Hamsini. I work with the money control. Two questions I have, sir. When I look at your gross NPA at 4.62, it's slightly higher compared to what most of the banks of your size is. So have you identified any ARC process or something like that to reduce the headline number? And also on the yield part of it, yield on assets. This quarter in particular, a lot of the PSU banks have seen a little bit of easing on yield, whereas you've been able to keep up your pricing. So what is contributing to your pricing here?
Yeah. So on your first question regarding the gross NPA, if you see our gross NPA journey for Bank of India, so we were at a gross NPA of 6.67 as on March 23 audited numbers, which came down to 4.98 in March 24, right? So we came first time below 5%. Now what we have done is that we are now at 4.62. Your point is correct that we are still on a higher side compared to other banks, but definitely that journey has already begun. And we have already given a guidance of that we'll be at around 4% by March 25 on the gross NPA number. So it will be coming down on a quarter-on-quarter basis, and we'll be settling at around 4% by March 25. This is
ARC plans or anything, no sale of assets on.
No, it's a combined strategy which is there in that. So there are 4 or 5 OTS schemes which we have floated for the field. There is a scheme with respect to the recovery in return of accounts, number 1. There is a scheme which is for recovery for accounts up to 25 lakhs. There is another scheme wherein recovery for up to accounts up to 50 crores is there. Then we are doing OTS. Then there is NCLT resolutions also happening. We are aggressively filing in the NCLT. And then we are also monitoring the SURFACE notice that we are sending, an auction through SURFACE, and also the ARC sale which is there. So on case-to-case basis, we are showcasing our assets also to the ARCs who are coming and then going for a switch challenge after that. So it is a 4, 5, 6 pronged strategy which we have adopted in order to bring down not only the gross NPA but even the net NPA. Even if you see, I'll elaborate that point further, that if you see our net NPA number for the first time, it has gone below that threshold level of 1%. We have now touched that 0.99%. So journey has already begun, and by March 25 you will see the numbers both on gross and net NPA side even better.
On the yield part, sir.
Yeah, as far as the yields are concerned, on the yield on advances you had asked, see, you are right that our yield on advances have improved. This time it is at around 8.60%, which is compared to other peer banks, it is much better. Again, there was a strategy. As a strategy, what we have done, 55% of our advances are RAM advances, where it is linked to mostly the external benchmarks like repo rates, where concessions are less, where typically the rate of interest is around 9%. So there the yields are better. As far as the corporate book is concerned, there also we have maintained our number at around 45% of the overall book. There also, as a strategy, what we have done is that up to 180 days only we are giving on the repo rate side. All other lending which is happening on the corporate book side is on the MCLR. So if you see the MCLR side, we have raised the MCLR in the last 15 months by around 6 to 7 times from April 2023 to say June, July. In fact, on this 1st August itself, again, we have raised the MCLR by 5 basis points on the 1 year MCLR. So in the MCLR bracket, if you see, our lowest MCLR is the overnight MCLR at 8.15%. And 1 year MCLR has now touched 8.95%. So, and we are the first one to announce the increase in the MCLR rate. So we are very cognizant on the MCLR side also that we should be pricing our asset side in an optimum way, the way the prices in the deposit sides are increasing. And MCLR is the right way to price a asset because it is as per the formula driven by the Reserve Bank of India, and it takes into account the incremental rise in the cost of deposits. So this is our clear strategy. We'll go through the MCLR route only.
One more question I have, sir, if you tell up. Any plan to rationalize your subsidiaries or monetize from your subsidiaries? You also have a insurance unit. You're invested about 30% there. Would you look at listing it? most of the other PSU banks are also drawing similar plans on that front.
Not immediately, not at this juncture, we are planning to monetize any subsidiary, but as and when we do that, definitely we'll inform to the press.
Thank you.
Thank you.
Thank you very much. Some intelligent questions coming up. Yeah. Can we have from there? Nobody has asked.
He's asking. Sangeeta is asking. LCR.
LCR.
Yeah. Thank
Any
you.
assessment, what would be the impact on NIMS?
Yeah, so as far as this RBI latest guideline is concerned, the draft circular is concerned, as you are all aware, that they have asked for certain feedbacks, right? So we'll be giving the feedback to RBI also and also to RBI through the IBA. This circular would be effective from 1st April 2025. So we have done some ballpark computation. According to us, the impact would be to the extent of around 10 to 15% on the LCR number. So if you see the LCR as far as our bank is concerned on the Q1 of 2024-25, so our LCR is above 120% on an average, on the average for the Q1 quarter, above 120%, which is our threshold number. We are above that. So the impact is around 10 to 15%. Ballpark number, but definitely we'll be giving certain suggestions to Reserve Bank on that, and let's see what pans out. But definitely, as per this draft circular, there will be definitely some impact on the NIMS and the margins, because some deployment of SLR will have to be made to improve the LCR, and once that deployment has to be done and we have to procure those SLR for this purpose, definitely there will be shrinkage of the margins.
How do you plan to mitigate that? And how much is your excess SLR?
So presently the excess SLR is around 30 to 35,000 crores. That's a rough number which is there as on 30th June. What we plan to do is let the final RBI guideline come out, then we'll finally strategize how to get it done.
One more thing on your advances. Could you give on this domestic advances, which is roughly around 5 lakh, how much of it would be to private sector?
Private sector?
No, private sector.
Private sector.
Public
Yes.
sector loans and private.
So exact computation we don't have at present, but should be at around 30% should be to central and state government and central and state PSUs. So I think that 70 to 75% should be including RAM sector. See, there is a basic component in this book is 55% of this book is the RAM book, retail, MSME and agriculture. This is all private sector, correct? On a broader way, I can give an explanation. So the remaining 45% which is in the corporate book, out of that 45%, nearly 60% would be to the corporate sector.
Hi, Ankit Mishra from ET Now. First of all, congratulations for the quarter. As far as the credit growth is concerned, I observed two outliers. One was personal loan, although the base is very small, and other was vehicle loans. So what is your assessment, particularly in these sectors? How do you foresee the growth in this fiscal year? And also, is there any plan for capital raising which you have in the current year?
Yeah, thank you, Ankur. As regards this personal loan, I think I have already explained in detail about the personal loan book. That is the growth which is there, 40% is because of the low base of from 7,000 crores to 10,000 crores, not bigger number is there. On the retail loan side, vehicle loan side also good growth has happened. That has happened because of the lot of tie-ups that we have done with the auto industries and also the dealers. So many number of tie-ups across the country, across the entire geography we have done in all 22, 23 states with all the dealers of various four-wheelers and two-wheelers. From that we are getting good traction and very good traction. And the book is also playing out well. Not much of SMA is also there. So we see a good traction coming in the vehicle loan side. And with the kind of economic growth which is happening overall at the grassroots level, at the tier 2, tier 3 cities level. So there also good traction on the vehicle loan side on four-wheeler and two-wheeler is concerned. So we do not see much of impact and issue as regards to that is concerned. As regards the overall growth is concerned on the credit side, we see that on a YOY basis, we will see a growth of around 13 to 14, though we have given a domestic growth of 17% this quarter, but overall it should be at around 14% for FY25 on the domestic book and overall between 13 to 14% on the global book. That is the number. Presently, if I also give you the number, we have a credit pipeline of nearly 30,000 crores as on date when we speak, with respect to corporate advances and 10,000 with respect to the retail advances. So 40,000 crore of credit line we are having where the sanction has happened or it is at various stages of sanction. So which typically is around 6 to 7% of our total global loan book. So we are having very good traction as far as the credit growth is concerned, and lot of opportunities are also available with the kind of economic growth which is happening, and with the GDP growth expected to be at around 7.25%. So 14% kind of credit growth is a very normal credit growth for the industry. Yeah. Capital raising. Yes, the last point was with respect to capital raising. So as far as our CRAR is concerned, we are adequately placed with respect to our CRAR. We have already taken a board approval. It is there in our presentation also with respect to capital raising of 5,000 crores in this financial year. 2,500 will be through Tier 1 bonds, which we would like to do in this quarter itself, in the coming quarter Q2, and Tier 2 we would be like to do in the Q3 quarter. So fresh equity raising at present, there is no board approval, and there is no there is no our indication also for raising capital through equity. Thank you.
Yes.
I had a question. So how long do you expect this tightness to last, the credit outpacing deposit? Because eventually the money has to come back into the system. And you all have started passing on the higher cost in the form of MCLR. But a large part of your book is repo linked. So will you be increasing your spreads? So during the festival season, do you see rates being higher than what they are, or coming down?
Yeah. So this resources crunch, we think that it will continue to remain in the next 3 to 4 quarters, because we don't see anything coming out of that unless and until the rates start easing out. So repo rate has not been reduced by RBI. They have their concerns with respect to retail inflation. Internationally also, if you see, some rates are rising instead of coming down. Japan has raised the rates. So there is still some uncertainty which is there in the system. Also, global uncertainties are also coming out. Recent events which are happening in Israel and other things. So we definitely feel that there will be some constraint as far as reduction in the rate of interest is concerned on the deposit side. And once the deposit side rates do not come down, definitely the rates for the lending side also will not be able to come down, because RBI formula on MCLR is very clear that if the cost of deposit gets increased in the previous quarter, then the MCLR goes up in the ensuing quarter. This is how it is there. So there will be some rate pressures. Interest rate will definitely go up on the loan side also. As regards the repo linked loans are there. Again, if the RBI reduces the repo side, definitely the rate will come down. But considering the fact that margin challenges will be there, we will be definitely repricing our loans and increasing the margins over there in order to maintain the NIMs. Thank you.
Thanks, Mayur. Yes. Anybody from this table?
As the risk of repetition, I would like to ask about your ROA guidance. I can see 0.7% and also ROE if you can provide.
So both of them are linked together, Ankur, as you are aware. So 0.7 is the actual ROA we have given for June 24. And this number is the same which was there earlier also in June 23. So for ROA guidance, we are giving a number of 0.80 for March 25, for the simple reason that the challenges that we are seeing, that is why we are seeing challenges in the form of the RBI circular on LCR which has come, which may also impact the margins finally, and also the resource crunch which is playing out presently in the industry. Keeping all these things in mind, at present we are giving a guidance of 0.80, but definitely this guidance will be subject to review, and maybe once we meet again after the September numbers, we may give a different guidance if some other things pan out. Yeah.
And how would you want to look at it
Yeah, project finance circular, at least as you know that it is again a draft guidelines only. So the suggestions we have already sent to RBI directly also and through IBA also. IBA is also sending the joint suggestions to RBI on that also. We have done some ballpark calculations in which the impact will be on CET1. It will not impact the CRAR, but definitely as per guidelines of RBI, it will impact CET1. That impact is at around 10 basis point, not much. As regards the credit cost increase is concerned on the DCCO circular, there the ballpark number impact which is coming is between 10 to 15 basis point for us. So not much of impact is there. So and we are certain that with the kind of suggestions that we have given to Reserve Bank to moderate it, definitely some moderation should happen, and the impact whatever we are saying on the ballpark numbers, it should go down further, because it has been represented by all stakeholders like banks, financial institutions, even the corporates, even industry players, infra players also. They have given their suggestions to RBI. Let us see the and wait for the final guidelines.
So I wanted to ask you on your tax outgo. Could you give some throw some light on? It's come down substantially this quarter.
Yeah, so we have shifted to the new tax regime last year in November, in the last calendar year, last financial year, because of which it has come down in this quarter. If you see, when you are comparing on a YOY basis from Q1 of FY24, because of the shift in the tax regime, we have shifted to the new tax regime.
This will be for all banks, or it's like Bank of India?
No, this is bank to bank actually. We took a management call to shift to the new tax regime in the last financial year. It is that impact.
Okay.
Yeah.
Sir, on your home loan book, we can see that on Q1Q basis, again, growth is around 2.5% only. So what kind of signs you are seeing from this portfolio?
So yeah, Q1Q sequential basis, the growth is the same number as you had said, but YOY basis, the growth in double digit in the housing loan book. There, I can tell you clearly is that one of the reason for this is the entire home loan book is a repayment book, which is a term loan. There are no ODs or anything in that, overdrafts and other things. So there is a lot of repayment also happening in the housing loan book. And obviously with our collection efficiency also going up, repayments are also coming in time. So we are trying to keep pace with new sanctions so that more disbursement and other things happen. But this quarter was a slow quarter as far as the disbursals was concerned in the housing loan because of various reasons like transfers within the bank. Q1 typically it happens. Then there was election. Lot of our officers, entire country were deployed in election duties, and also because of the lot of heat wave and other things during the month of May and June, that also impacted the overall numbers. But now from July onwards, this improvement has started happening in the housing loans. Definitely these numbers will be much better in Q2 than Q1 numbers on the housing loan side.
So on your insurance subsidiary, that Star Union Dai-ichi, you are happy with the performance because now the FDI limit up to the 74%. There are few foreign players also want to increase their stake. So are you any kind of in any talks to shed away your stake?
No, presently it's a joint venture between Daiichi, Bank of India and Union Bank of India. So we are invested to the extent of around 28%. So we have taken a management call not to dilute our stake below 26%. That is what we have told the SUD board. So this is what it is. But as far as the overall potential is concerned and the kind of growth insurance is giving, with lot of that insurance penetration happening across the country and lot of investment which is being done by all individuals in insurance, we definitely see huge potential in that. So we are not only selling SUD Life, but as a partner, we are also selling insurance policies of LIC. So we have two partners presently, LIC and SUD Life, and we are selling good number of policies under both of them. So we presently see no dilution at least happening in the SUD Life from Bank of India side.
We are looking at an uptick in the valuations going forward. Yeah, it's around 21 plus 1,000 crores. Yeah, that is our value, not the overall value, our shares.
So on the book value, it's around 1,200 crore. your
Embedded, he asked, no? Amtini is right, embedded.
Also, would you like to give some kind of guidance in cost to income ratio? How has been the trajectory?
Yeah, cost to income ratio, again, if you see, we have, I would say that it is flat, it is not increasing. So cost to income ratio, we have closed at 51.60, Ankur, in this quarter, which was 51.73 for the entire financial year. So if you see the last financial year, it has been increased because of the wage revision bipartite settlement which has happened. So whatever the cost was there of the bipartite settlement, that has already been passed in the last financial year, and this quarter the entire it has now come as a part of a salary. So we do not see further much increase as far as the cost to income ratio is concerned. As far as the guidance is concerned, we are giving a guidance of around 51% we'll maintain for the financial year 25.
Any more questions? Any more virtual questions? So, thanks, Anurag, for asking those questions. And I thank our top management, our MD and CEO, sir, and all executive directors for this enlightening session with the press. Also, sincere thanks to all of you. Despite heavy rains, all of you came